Today, we're going to talk about all the financial benefits you get while being deployed in the military and how to utilize that to really take your financial situation to the next level. The very first thing is the Combat Zone Tax Exemption. We all know that while you're deployed, your base pay and all of your other normal taxable income is actually tax exempt, which is a huge benefit in itself because it means that you're going to get to keep an additional 20-30% of your paycheck the whole time you're deployed. But there's a couple of other benefits here, and one of the coolest things about this Combat Zone Tax Exemption is that you only have to have been deployed for 1 day in a month for that entire month to be tax exempt. So let's say your deployment starts on the last day of May and ends on the first day of December. May and December would both fully be tax exempt, which is huge because, again, you were only deployed for 1 or 2 days of that month and you got the full month's write-off. This exemption includes your base pay and all of your, hostile pay and all of your normal pay. And then if you know your paycheck well enough, then you would know that all of your allowances like BAH, BAS, whatever, are always exempt from tax anyway, which is one of the reasons why, and I've got entire videos on this, but like your W-2 income looks a little bit lower than what you actually receive because, again, your BAH and your housing allowance and your food allowance and all that stuff's not taxed anyway, which is a huge benefit for you because it means you get more money while staying in a lower tax bracket. And then when you deploy, that just gets compounded even more because now all of your pay is tax exempt, which is huge. The second benefit here is the Saving Deployment Program, or SDP. And the SDP is a savings account that you can put up to $10,000 in and earn a 10% return that compounds every quarter the entire time you're deployed. And that's another huge benefit because there's no savings account in the world, but at least in the US that I'm aware of, that even comes close to 10%. And this is a risk-free, military-backed, not changing 10% compounded quarterly the entire time you're deployed, which is really beneficial to you and your finances. Now, the cool thing here is you can set it up to where when you deploy, you take a piece of your paycheck out up to that $10,000 limit, and so it builds while you're deployed. But if you have cash, you can actually write a check to fund your savings deployment program up to, I believe you can fund it up to the amount of your base pay monthly. So let's say your base pay was $3,000 a month. In theory, and this is my understanding, you could write a $3,000 check of, whatever money you had set aside on month 1, 2, and 3, so that you'd have basically maxed it out by 3.5 months into the deployment and then get that 10% matching for the entire time you're deployed. But if you don't have money just sitting around waiting for this savings account, then at least you can put your paycheck or a chunk of your paycheck in there the whole time you're deployed and get that guaranteed return, which if I'm you, I would do, because the faster you can get $10,000 in that account, let's just say for easy math, $10,000 all in on day one, which I don't know that you could do that, but let's just say you get $10,000 in on day one and it compounds at 10% quarterly. So that first quarter would then jump to $11,000, then it would jump to $12,100, and then it would jump to $13,310, and that's 9 months, right? That's a $3,000 return, $3,310 on money in a bank account just chilling. That's pretty good. Number 3 here is that because your combat pay is tax exempt and your pay is exempt while you're in these combat zones, the Roth TSP, which is normally, just in case you don't recognize how these different work, so like the traditional TSP, you don't pay any taxes up front, but you pay the taxes on your gains when you pull the money out. Cool. For the vast majority of service members would benefit more from the Roth TSP, where the money's taxed when it goes in, and then on the way out, it's not. And that's assuming that you're making the assumption that you'll be in a higher tax bracket when you retire than you are as a, E4, right? And so the real cool benefit here while deployed is that because your pay is tax exempt, you don't pay taxes on the money that comes in. So you can contribute to the Roth TSP, tax exempt dollars, didn't get taxed. And when the money comes out on the other end, it's not taxed. So you don't get taxed on gains, you don't get taxed on withdrawal, normal Roth stuff, but you didn't get taxed on the contribution either because it was combat exempt pay. This allows you to contribute more on the front end and benefit from completely tax-exempt, tax-free growth on your Roth TSP. And not only that, but the normal TSP contribution limits don't apply while deployed. So I think right now in 2025, it's $23,500 is the cap that you can put in your TSP every year. And while deployed, it's closer to $70,000. And that number is going to change a little bit here and there. But last I heard, it was like $70,000 is your combat exempt TSP allowance, meaning that if you have the cash coming in or you don't necessarily need to touch the money, which the vast majority of us don't while deployed. There's not really anything you have to spend money on, especially if you're a single guy. You can max your TSP out and contribute way more. Now, we're not all going to be able to put $70,000 a year in, but if you're in a spot where you could put $30,000, $40,000 in, you basically timeline crunch a 2-year contribution allocation into 1 year, which means you're going to get an extra year of compounding on that money, which I'm not going to do all the math on, but it's really, really, really beneficial. So if you do the savings deployment program and max your TSP out, you could set yourself up for success very quickly off of deployment. And yes, you can put bonuses that you receive while deployed into this stuff, which is a huge benefit. Now, on top of all that, number 4 here is your special pay and allowances, meaning you're going to get that danger pay, right? That imminent danger, hostile fire pay that's an extra $225 a month, which admittedly, you're like, I'm putting my life on the line. I get an extra $225 a month. But hey, that's an extra $2,700 a year that you can contribute to this stuff, which is great. And then if you're married, you also, or have a dependent, you also get the family separation pay, which is an extra $250 a month. So there's an extra $3,000. And then you're also going to get that hardship duty pay, which is anywhere from $50 to $150 a month. So that's an extra chunk as well. If you get all 3 of those, that's an extra $625 a month or $7,500 a year that you get that you can now allocate, to your TSP or whatever, which if I'm you, I would allocate all of it into some kind of investment because again, that's money you didn't normally receive and you're on a deployment, so your expenses are going to be lower anyway. And then number 5 here, if you have any kind of per diem or TDY or like training or you need to go anywhere while deployed, all of those, per diem payments, TDY payments, whatever are all tax exempt while you're in that zone as well, just an additional benefit. And then the 6th one here is you get extended tax deadlines. So usually you get an extension up to about 180 days from when you come back from deployment, which means if you miss the, April or May or June or July, whatever tax date that you would normally pay, which I think for most people is April 15th. But as a real estate investor, I'm usually looking at August or September 15th to close out all my taxes just because of all the complications and whatever. You would get up to an extra 180-day extension past your normal deadline from being deployed, which is really beneficial. Those are automatic filing and payment extensions, right? Which is nice because you don't have to freak out and worry about it. Even if you miss the mark or you don't do it, you can retroactively with no punishment from the IRS, which is nice. You've got the Service Member Civil Relief Act, which again, for those who don't know, that reduces interest payments to 6% on any debt that you had prior to the service. I believe you can also trigger it going on a deployment. You can lower debts you have to 6%, which is great. But more importantly, the Service Member Civil Relief Act here pertains to breaking a lease. Like if you're renting an apartment or whatever and you get orders to deploy, you can break that lease with the Service Member Civil Relief Act without getting screwed by your landlord, which is nice. You're not going to have to pay all those penalties for moving out early. And I mean, you don't have to. You could stay in the lease, especially if you got a family. But if not, and you can get rid of your lease and put all your stuff in storage, then that's just more money you can save because if you were getting BAH, you're going to continue getting BAH while deployed, which is just additional money you can put into your STP and their savings plan. And then you've got the MLA, the Military Lending Act, which basically just bans people from being predatory towards service members and vets who are deployed, and it caps interest rates on certain loans, so just an additional protective measure for you. And if you're deployed and there's financial struggles, we've got things like Army Emergency, Navy Marine Corps Relief Society, and all these different various emergency financial services that can help you work through those difficult times. You've got the benefit of you can pause your cell phone payment. You can pause payments on automobiles and stuff. There's a lot of loans and institutions and things that will allow you to pause payments while you're deployed. So for example, your cell phone, you're not going to need it while deployed. So there's $100, $200 a month that you can again save to reinvest. And my running theme here is that all the money you're able to save on deployment, you should be reinvesting as aggressively as possible because you want to take advantage of the tax exemptions and the additional money to invest to set your future self up for success. Unfortunately, most service members, they go and they blow all their deployment money on dumb, right? You buy cigarettes and supplements while deployed. You're trying to get swole. You're doing whatever. You're buying random for back home. As soon as you get home, you're buying vehicles and toys and you're just blowing it all. I mean, we used to joke about, there was this guy, 2 guys in my unit, they were maintainers who had $70,000 lifted dually diesel stacks, the whole 9, right after they got back from deployment. They just poof, blown. And as much as we talk, I bought a Harley, an 88 F250, a sniper rifle, some tattoos, supplements while deployed, all the things, and did not have a whole lot to show from my deployment money when I came back from my deployment. Had I known this information and had the financial IQ I do right now, I could have set myself up way more successfully than what I did with my money. I basically blew it all on toys, and I wouldn't say I regret it because I enjoyed the toys. But I regret the fact that I easily lost out on what would now be multiple six figures in my thrift savings plan had I just played my cards correctly, because I had like $20,000, potentially more if I didn't spend money on supplements and whatever, that I could have invested into the thrift savings plan when I was 20, which, if you know anything about how compounding interest works, we're talking like an extra $300,000 in my TSP by the time I retire that I'm just never going to have because I bought those toys. So again, don't blow your entire pay on, tattoos, Harleys, women, trucks, rifles, whatever. Ask me how I know. Try not to buy a whole bunch of unnecessary crap while you're deployed. Like, obviously there's some quality of life stuff. You're going to want the occasional protein shake or energy drink or maybe cigarette or whatever. But just try not to blow all your money on just everything you possibly can touch, supplements, whatever, while deployed. Live off with the food they give you, the MREs, the whatever, entertain yourself while there, work out without having to eat a million supplements, and you can genuinely have a really, really, really solid chunk of money to invest while you're deployed. Real quick, one of my favorite strategies here, if you're in a position to do this, is if you had listened to some of my other videos where I talk about buying like a fourplex with the VA loan and you live in one unit and rent the other three, which is like my favorite strategy ever for using the VA loan to get started in real estate and set yourself up for success, which I've got entire videos on that, so go check them out. But if you'd done that and you get orders to deploy, well, now you can do what I call the deployment hack, where yes, you're supposed to live in that one unit as your primary residence for the first year you own the place. But if you deploy, well, you're deployed. So it's still your primary residence, but you're deployed. And so you can now take all your stuff and put it in a storage unit, rent that fourth unit out while you're gone, because again, you're deployed. So you're collecting that BAH. Your property is now cash flowing the entire time you're gone. All your stuff's in storage for like $100, $200. And then, or even if you use the base storage, it's free. And then all of that income you're getting in is tax exempt, and you can just force all that into TSP or an investment account or into more real estate when you get back. And then when you move back, you just plan to reoccupy that fourplex, or if it's been over that year mark or you're about to PCS, then you can do it at your next duty station or buy another one locally. Because again, you're not violating any, it was your primary residence. You intended it to be your primary residence. You just deployed. That doesn't negate the fact that it's still your house that you're planning to live in. And so you can rent that space out while deployed, and you're not going to get in trouble, which is just a fun way to really supercharge all of these things together. Just as a quick rundown here, we're going to just do this as a guide. If you get deployed, the very first thing you should do is you should take advantage of your Combat Zone Tax Exemption stuff, maximize all of that. And then you should activate the Savings Deployment Program and fund that $10,000 as quickly as you can. So if you have the money, then write checks to it at the max amount they'll allow. And if you don't, put the largest percentage of your paycheck you can afford to into it until it's maxed out and benefit from that. Once that's maxed out, you should max out your TSP contributions into the Roth TSP as large as you possibly can afford to do. Put any, bonuses, or at least a chunk of any bonuses or whatever you can into your TSP, and live off the largest chunk of your money that you can going into your TSP, and live off the smallest amount of money you can, so that you get that double tax advantage on your Roth TSP, which you'll never get anywhere else. And then you're going to want to collect all your special pays, which is automated, and again, reinvest all that. Make sure you've got all the legal, stuff in place so that your loans are at a low level. You pause all the payments you're able to legally pause, and you can just, again, take as much money possible as you can tax exempt into your financial hub to reinvest into TSP, an emergency fund, index fund, wherever, and don't just blow it. Now, look, in the short term, it is very realistic that you could save $20,000 to $50,000 during a deployment that can set yourself up for success. And I'm telling you right now, in the long term, 20 grand invested the right way is $300,000 when you go to retire. $50,000, that just compounds. We're talking close to $1 million by the time you retire. And that's assuming you didn't buy any real estate with it. You didn't have the fourplex that you were house hacking. You didn't have extra income streams. That's just off of your military salary. And if you're a higher enlisted or an officer, or you get a bonus while deployed, those numbers just go up exponentially, which again just sets you up even more for success. So if you're deploying, watch this video again, Take advantage of all of this and really supercharge your financial trajectory. And if you're wanting to know like a basic financial freedom plan structure that I have and I think makes sense for everybody to lay their foundation financially before they run off and start investing, check out this video I did on the financial freedom plan that I love and help set yourself up for success. And if you got something out of this video, make sure you subscribe or share it with a friend and then comment below which of these things you found the most beneficial, or if I missed something and you've got another piece of advice for how to maximize the deployment, comment down below so we can mark it up and let other people see that win. Love you guys. Have a great day.